The origins and motivation behind the creation of Bitcoin Cash can be traced back to fundamental disagreements within the Bitcoin community regarding the best way to scale the network to support increased user demand and transaction volume. This section delves deeper into these origins, outlining the ideological and practical concerns that led to the development of Bitcoin Cash. As Bitcoin gained popularity and adoption since its inception in 2009, the volume of transactions began to stress the network's capacity. The original Bitcoin protocol had a block size limit of 1 megabyte, which was intended to prevent spam attacks, but eventually became a bottleneck as the network grew. This limit meant that the network could only handle a limited number of transactions per second, leading to slower transaction confirmations and higher transaction fees during peak usage times. The debate over how to best scale Bitcoin was not just technical but also philosophical. The community split into two main camps with differing views on how to handle the scaling issues. Small blockers. This group, which included many Bitcoin developers and traditionalists, believed in keeping the block size small. They argued that larger blocks would lead to increased centralization of the network because only those with more significant computational power and resources could effectively participate in mining and maintaining the network. Instead of increasing the block size, they supported implementing second-layer solutions like the Lightning Network, which could handle transactions off the main blockchain, thereby decongesting it. Big blockers. This faction advocated for increasing the block size limit to directly allow more transactions within each block, thus increasing the network's capacity. They argued that this was a more straightforward and immediate solution to the scalability problem and would help maintain Bitcoin's utility as a transactional currency rather than just a store of value. Several proposals were put forward in an attempt to reconcile these differing views. One of the most significant was segregated witness, SegWit, which proposed to optimize the storage of data in blocks without directly increasing the block size. SegWit was contentious but eventually activated on Bitcoin in August 2017. Parallel to the SegWit discussions, the big blockers rallied around various alternative proposals to increase the block size. These included Bitcoin XT, Bitcoin Classic, and Bitcoin Unlimited, each suggesting different ways to increase the block size or make it adjustable by miners. However, none of these gained enough consensus to be adopted by the entire Bitcoin network. The culmination of these disagreements led to the decision by a coalition of big block supporters, including miners, developers, and users, to create a hard fork of the Bitcoin blockchain. This faction implemented a block size of 8 megabytes in their new fork, significantly expanding the network's capacity. They named this new cryptocurrency Bitcoin Cash. The split was not just about technical solutions, but also about differing visions for the future of Bitcoin. Bitcoin Cash proponents believe their approach was truer to the original vision of Bitcoin's creator, Satoshi Nakamoto, as a decentralized peer-to-peer electronic cash system. Bitcoin Cash (BCH) introduced several technological features aimed at enhancing its functionality and scalability compared to Bitcoin (BTC). These features are central to Bitcoin Cash's value proposition of being a more practical currency for everyday transactions. The most notable technological feature of Bitcoin Cash is its increased block size. Initially, BCH increased the block size from Bitcoin's 1 megabyte to 8 megabyte, aiming to process a larger number of transactions per block. This change was made to reduce the time and cost associated with transactions, addressing the primary limitation faced by the original Bitcoin blockchain during periods of high usage. In May 2018, Bitcoin Cash further increased the block size limit to 32 megabytes. This expansion significantly boosted the theoretical upper limit on the number of transactions the network can process per second. Bitcoin Cash introduced the adjustable block size cap, which gives miners the power to adjust the size of the blocks they mine. This feature is designed to allow the blockchain to adapt to transaction volume changes dynamically, ensuring that the network remains efficient regardless of the number of transactions. In May 2019, Bitcoin Cash implemented Schnorr signatures, a cryptographic signature scheme known for its simplicity and efficiency. Schnorr signatures allow for better privacy and lower storage and bandwidth use compared to the ECDSA signatures used by Bitcoin. This feature also enhances security against certain types of attacks on the signature scheme and enables more complex transaction types like multi-sig transactions to be handled more efficiently. Bitcoin Cash uses a unique difficulty adjustment algorithm which adjusts the difficulty of the proof of work problem for each block. This algorithm aims to ensure a consistent block time of about 10 minutes, regardless of the number of miners on the network. This adjustment happens much more frequently than in Bitcoin, which adjusts every 2016 blocks. The quicker adjustment in BCH is designed to keep the blockchain stable and responsive to rapid changes in the hash rate, which can happen after the network splits or if the price fluctuates significantly. Unlike Bitcoin, which is predominantly influenced by a single development team, Bitcoin Core, Bitcoin Cash has multiple independent teams of developers proposing and implementing improvements. This decentralization of development is intended to prevent any single group from gaining too much control over the cryptocurrency's development path, potentially leading to more democratic and rapid advancements. Bitcoin Cash also introduced several enhancements to Bitcoin's scripting language to allow for more complex transaction types. These include features such as OP_checkDataSig, which enables the verification of messages from outside the blockchain, thus facilitating the creation of oracles and other complex contract types. The introduction of Bitcoin Cash has had a noticeable impact on the cryptocurrency market. It has been subject to intense volatility, partly due to ongoing debates within the cryptocurrency community about its legitimacy and potential to replace or coexist alongside Bitcoin. Bitcoin Cash has established itself as one of the top cryptocurrencies by market capitalization, though it has not approached the market capitalization or acceptance of Bitcoin. Bitcoin Cash's entry into the cryptocurrency market significantly influenced both the market dynamics and the broader discussion about Bitcoin's scalability and usability. This section examines the market impact of Bitcoin Cash from its inception to its role in the current cryptocurrency ecosystem. Upon its creation in August 2017, Bitcoin Cash quickly established itself as one of the leading cryptocurrencies by market capitalization. The new coin was embraced by a significant portion of the Bitcoin community and several major exchanges, which offered Bitcoin Cash as an alternative or complement to Bitcoin. Its introduction led to a mixture of excitement and skepticism among investors and enthusiasts. Some viewed it as a practical solution to Bitcoin's scalability issues, while others saw it as a contentious split that could potentially dilute the market value of Bitcoin. Like many cryptocurrencies, Bitcoin Cash has experienced significant price volatility. Its value has seen sharp increases and dramatic declines, reflecting broader market trends and internal developments within the Bitcoin Cash community. Notable peaks in its value have often coincided with periods of increased transaction activity and interest in cryptocurrencies in general, while declines have been linked to regulatory news, shifts in investor sentiment, and technical challenges within the network. The launch of Bitcoin Cash reignited and deepened the scalability debate within the Bitcoin community. The practical demonstration that a significant portion of the community supported larger blocks prompted further discussions and developments around scalability solutions. The existence of Bitcoin Cash has also inspired the creation of other forked coins and alternatives that propose various technical solutions to the perceived limitations of Bitcoin. Bitcoin Cash's increased block size allows for lower transaction fees compared to Bitcoin, especially noticeable during peak congestion times on the Bitcoin network. This feature has made it attractive for use in everyday transactions and microtransactions. However, despite these advantages, Bitcoin Cash has not reached the level of widespread adoption that some of its proponents had hoped for. Its use as a medium of exchange is growing, but remains limited compared to Bitcoin and other major cryptocurrencies like Ethereum. Bitcoin Cash is in continuous competition not only with Bitcoin, but also with a range of other cryptocurrencies that aim to serve as practical digital cash systems. This competition has spurred continuous development within Bitcoin Cash, including regular network updates and improvements aimed at maintaining its relevance and efficiency. The Bitcoin Cash community has faced several challenges, including multiple forks. The most significant was the split into Bitcoin Cash ABC, now Bitcoin ABC, and Bitcoin Cash SV, Satoshi Vision, in November 2018. These forks were prompted by disagreements over the network's technical direction and governance, illustrating ongoing challenges in achieving consensus in decentralized networks. Bitcoin Cash represents a fascinating chapter in the evolution of blockchain technology and cryptocurrencies. Its creation underscores the vibrant and dynamic nature of the community and the ongoing debates about how best to scale and improve blockchain technology. While Bitcoin Cash has made strides towards creating a scalable cryptocurrency, it continues to face challenges that reflect the complexities of developing decentralized digital currencies. As the blockchain landscape evolves, Bitcoin Cash will likely continue to play a significant role in shaping the future of digital transactions.